Interest rates are rising, lumber prices are increasing, and foreclosures are surging. But is the housing market going to crash in the next year or two? And should you still be investing in real estate right now, or should you wait for the housing market to crash to snap up a better deal? In this video, I'll share my thoughts on exactly these topics and let you know what my thoughts are based on the facts and not what I want to be true. So let's get right into it. There are a lot of people on the internet saying,
Oh, the housing market is about to crash. Wait before you buy. Don't buy now because it's going to crash any week now.
Many months later.
and then there are also a lot of people on the internet saying there's no way possible that the housing market could crash. And both sides have some merit, but I think the reality of what's actually going to happen lies somewhere in the middle. And that's exactly what I've talked about on my channel for the entire year of 2021. But first, could there be an event that the housing market could come crashing down in no time at all? Sure, anything is possible as we saw with the pandemic. And if the Fed were to do something crazy like increase interest rates to like 5% overnight, then that would definitely have a negative impact on the housing market, especially after people have gotten so used to record low interest rates. Or could the economy come crashing down and everything come to a complete halt? Well, we kind of saw that last year when the pandemic began. But how is the economy, how is the housing market doing after those events occurred last year? Well, to get a better idea, let's take a look at what I think is the most likely scenario for the housing market coming up in the next year or two. The Fed has mentioned a number of times that they would give plenty of notice about interest rates increasing. And they wouldn't do it overnight, they would taper the interest rates over an elongated period of time. So what this means to me is there's unlikely to be any major negative impact on the housing market due to interest rates rising over a long period of time. That doesn't mean that housing prices won't shift at all, because I think it's very likely that housing prices will start to slow down in growth. This is because anytime the interest rates go up, housing prices typically adjust based on those rates. So the general rule is that when interest rates change by 1%, then the housing prices tend to change by about 10% in the opposite direction. For example, if interest rates were to go up by 1%, housing prices would be expected to go down by about 10%. This is just about where the math comes out that the monthly payment would be the exact same if the events didn't occur. And when it comes down to it, real estate prices come down to affordability, the monthly payment. So when interest rates go down, that allows people to afford more a house. But typically when interest rates go down, housing prices will go up by even more. And the reverse is also true. As interest rates go up, housing prices tend to go down. And this doesn't mean that housing prices are actually going to go below where they are today. This just means the growth of the housing prices are going to adjust based on that amount. So for example, if interest rates increase by 0.5% over the next year, then instead of housing prices growing by 12% per year, we would take about 5% off of that growth, leaving us with about 7% growth for that year instead of 12. So while housing prices would still go up, they would go up less aggressively. But of course, if we saw a dramatic shift like interest rates increasing by 2%, then housing prices would definitely drop below their current levels, as they would drop by about 20% from where they are. But that is, again, very unlikely to actually happen. Now let's get into some of the facts about the incoming housing crash. First of all, I don't think there's going to be any housing crash in the next year or two because of anything that has happened in the last 2 years. And this isn't just my opinion, this is based on the facts of the market. So why don't I think there's going to be a major housing crash like so many other people on the internet? Well, this is because of exactly what the facts say. The number one fact has been demand is outpacing supply, and supply cannot keep up with the demand for housing right now. And this has been the case for many years as we have been underbuilding houses and we have a major housing shortage as well, which means we need to make up a gap of some 5 million homes. So that alone could take many years if we ever reach that at all. Next up, interest rates will remain relatively low for the years to come. Interest rates are expected to begin creeping up, which they have already started. However, they're not going to increase significantly in the next year or two. We're expecting to see about a 0.5 to 0.75% increase in interest rates by the end of 2022. So while that does sound like a big increase, I think it's much needed because interest rates have been so low for so long. And here's another thing that a lot of people thought was going to crash the housing market: forbearance. So with forbearance ending over the last couple of months for millions of Americans, we have not seen a sudden drop in forbearance month over month. Many people thought that when forbearance ended, there was going to be a huge shift, a huge increase in the number of foreclosures because everyone on forbearance was going to lose their homes. That has not been the case because of many of the programs that banks have put in place to help homeowners keep their homes. In fact, since forbearance has ended, the number of new listings on the housing market hasn't increased significantly. In fact, the number of new listings is still below that of 2020 at the same time last year, and still on par with 2019 and 2018 numbers. And while foreclosures have surged in the last month, they're still far below pre-pandemic levels. This means that we haven't seen a significant increase in foreclosures, and in fact we've seen less foreclosures since the moratorium had ended on foreclosures. And this again was something that a lot of people pointed to as the number one catalyst for the housing market crashing. A huge number of foreclosures coming to the market as soon as they were opened up again. And we haven't seen that in the numbers. So in short, that's pretty much why I don't think there's going to be any major housing crash in the next couple of years. But should you buy now or should you wait to buy? I've heard so many people since even the pandemic started saying they're going to wait to buy a house because they want to wait for the housing market to crash to get a better deal. But we haven't seen that over the last 18 months, and I don't think we're going to see that over the next 18 months either. I was originally in the camp that thought that foreclosures were going to spike after the pandemic and everyone was going to lose their homes and housing prices would be so low that you could buy up so many houses. But that hasn't been the case, and as I've researched the numbers in the last year, I found that there's no evidence for that at all. And now as we're seeing these programs end, we're seeing that these facts that we thought were true have actually become true. So for me personally, I haven't bought into the hype of the market crashing anytime soon, and I haven't been waiting to buy real estate. And I'm going to tell you exactly what led me to come to the conclusion that I should buy real estate now and not wait. One of the biggest reasons for me is that when I buy real estate, I'm not buying it for short term, I'm buying it long term. And historically, real estate long term always appreciates. But for example, even if you bought a house in 2007 in Q1 when real estate prices were at their peak at about $257,000, you would fast forward to today and see that the median housing price today is $357,000. So over the last 14 years, real estate prices have gone up by about 50%. And we don't have to look at 2021 to say that real estate prices rebounded. If we look back at 2013, that is when housing prices reached the same level and actually surpassed the levels of 2007. And so if you're investing in real estate long term, this was about 6 years later that real estate prices rebounded to where they were after the biggest crash in history. But if you're in real estate for the long term, 10, 20, 50 years, or however long you plan to hold real estate, then you're always going to make your money back on your properties, even if you see a huge crash like 2008 saw. So what this means is that real estate prices always rebound. They always appreciate over time. And this is generally tied to inflation as well. And for me, I see real estate as being the best way to create wealth when you don't have a lot of money. I think it's a much better option than the stock market for creating real wealth when you don't have a lot of money to work with. And then wrapping up, even if you didn't make any money on the house appreciating, you're going to have rental income, you're going to have principal pay down, tax advantages, appreciation over time, all of these other benefits of owning real estate. So there's a ton of ways to make money with real estate, not just the appreciation of the property. And so that's why I don't think the housing market is going to crash, and this is why I think you should buy real estate now and not wait. Buy to hold, don't hold to buy. Start building wealth today.